Alrighty, welcome to another video. It's Halos here. Today, this one I'm going to be covering market structure. Okay, it's going to be like just a 101. Going to try to keep it short, but I'm going to give you some just a nice way to view it and what to do when we first look at the charts. In my opinion, price action, market structure should come before all like just regular patterns and your entries, because you need to know whereabouts you are in the market. What kind of market are we actually currently in? You know that markets, they oscillate between ranging, trending, reversing. So identifying where we are and trying to identify trading zones is really going to help you along your way. So let's get to it. So first of all, I'm just going to be covering, just to do some diagrams, just to know we're on the same page. So it's going to cover the different markets, okay? So a trending market, as we know, will be making higher highs and higher lows. Nothing new here. Now, at some point, market will do something a bit funny. And it was never as clean as this, unfortunately. But knowing where we are is going to help. Okay, so we can see that here we were trending, and up the top, we started like making a little double top, make a higher low. Then we had like a bit of a reversal point, and then there was no real structure up here. So this point we were ranging, and then it started like transitioning to a reversing market. Okay, so I just want to cover when we're in a trending market, when we're making higher highs. We've got to be making higher highs and higher lows. Now, one thing is when we're making these higher highs and higher lows, like a lot of the diagrams are saying that this is where market will react off. Okay, but it doesn't always. It's never that clean. The truth is that anywhere from this, what I'm going to call like this zone here, where price started to make that rally up. Unless this swing point is broken, we are still in the trending market. So the market can do all this kind of crazy stuff, okay? But unless we break the most recent significant swing, okay, like this little level, if we're pulling back, all we're doing is like this little like complex pullback. We haven't actually changed market structure. We're trending up still until this level is broken. Now, the market can always, as well, like if it can pull back until anywhere in this zone. Okay, it can come back as far as all the way down here to react. So bear that in mind, that this whole area is more like a zone. Okay, this is not your. I'll change this color actually. This bit. Oh gosh, that's the wrong one. Okay, so this bit here is not just your only support. The support is anywhere from this bit over here to down here. Okay, so we can have deeper pullbacks in some cases. We can have pullbacks all the way down here before they rally up. It's never always going to be the most recent resistance now turn into support. So what I would see here, let me just remove some of this. So if when you're looking for structure, you're looking for these most recent swings. Okay. So at the moment, we're still trending up because we're still making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. And this is your last swing point. Now, until this is broken, you're still in an uptrend. Okay, nothing's actually changed. Nothing's changed until this swing is broken. So when this came down, even though it didn't make a higher high, it still made a higher low. And then wherever you get the new higher high originating from, so in this case it will be over here, until this is broken, you're not like all you've done is you pushed up. Now once this leg has broken the low of over here, you're not in a confirmed trend. This is just a reversing market at this stage. So it's just a reversing market. You're not in a trend until you've got a lower high and a second lower low. Okay, once that's happened, then you can say you're in a confirmed downtrend. And then you want to see the pattern just sort of repeat itself. But it never is always that clean. Okay, so it can just, market does look messy, but just focusing on these major swing points is going to help you along your way. Okay. At this stage, when it becomes no structure, okay, so say we're moving up and then down and then up and then down and then up, down, up. This here is that if there is no real structure, we're just ranging, okay? So you need to pick your strategies wisely in these cases. So what I like to do is combining you got to combine your time frames. So I like to use the daily, and I like to zoom in on the daily. I like to read the candles, use it for my support and resistance, and then I'm going to use the lower time frame. I like to zoom in and see how the candles are forming, because that makes a big deal on how I'm actually going to be choosing the strategy I'm going to use, or the price action, or how I'm going to get in and out of the trade. But I also need to zoom out as well and just look at the overall structure. So a lot of my clients, when I'm looking at their trades, they're just taking them in the wrong market. And whenever I ask them to say, like, what patch of the trading are we in, like where in the market, they're not really 100% sure. Like, they zoom in either too much or they zoom out way too much. So you just need to find that the right balance of when to do things. So I'm hoping that this video is going to clear things up. So let's go over to the charts. Okay, so what I've got here is Euro Yen on the daily. Okay, so let's just look at overall structure. So what I'm going to be looking at is the major swing. So let's just start the left-hand side, and then what price is pushed up, okay, gone sideways, and it's found something for here to push price up again. So this is my last major swing level, and then until this point. Then when we got up here, we've consolidated with this range for a long time. We've failed to actually close higher. So I want it to close higher. We had to push up here. So this area down here, this is where the move started from. We got to count back the candles, count back from where these blue candles started from. Now, it started from here. So this is my next major swing. Price moved up, came back down. We're still trending. We're still on an overall uptrend. That's my next swing. Price is now pushed up. Price has pushed up, made a new high. So this is my last major swing. Now price has moved all the way down. Okay, at this stage, we're like in we're rotating this like a bearish rotation. Okay, so this is the last major swing. Price pushed up. Now we've had like this bearish rotation, but we're not in a trend. We're not in a bearish trend until we've broken that low, and then we could say we've got two lower highs and two lower lows. Then we'd have like a confirmed trend. Until this stage, market structure is broken. Market structure is broken in this case. But we have a new swing low. That's the main thing. Okay, so then prices come up, come down. Then we made a new higher high. So sort of like this level becomes significant. Prices come down, made a new base. Prices pushed up. Okay, we still haven't broken the low. So this is more like a complex pullback. So we're just slowly pushing up to this level. If this level gets broken, we'd say that we've got a new, like we might be resuming the trend up again. But until this stage, until that happens, we're in this bearish rotation. So we're looking more for there could be a sell opportunity coming. Okay. So let's just clear some of these things. But this is on the higher time frame. This is on our daily. Okay. So how are we going to use this? So our entry is going to be on our lower time frame. So we just need to identify key areas that we think there could be like reactions on the daily, because if you've got two bearish candles or two bullish candles, that's trending on the lower time frame. So use that to your advantage. Just understand where you are in the bigger picture, because then it's going to, you're going to be able to structure your trades and plan for things a lot easier. Okay, so I'm going to use daily for just to use my support resistance and to read the candles and to see like where my zones could be that I could expect a reaction. So if we didn't know that these last 4 candles are going to happen, okay, say we're in this section up here, you've got to see this as resistance. You've got to expect that could be a reaction zone. So once it gets up here, you've got to pause your mentality and just see like, what are we going? We need to wait to break through it, or we're going to need to see if we reverse off it. Okay, if we're going to put in a couple more. And say every time I'm just looking at when the candles change color. Okay, so blue to red. So something here was significant. Price pushed up, found some resistance, and then pushed away. Okay, let's just put in a few more, and then we'll go to the lower time frames, and then just see how price looks on the lower time frame. Just put one there. Okay, so this area is significant. We should expect that price could react at this level. Let's go to the 4 hour and let's see if we can tidy something up. Okay, so this is where price action comes in. We can see to the left, we look at this, we're going to look in a bit more detail at this daily area. Now you can see that price has pushed up, come down, pushed up, and then we're sort of ranged for a little bit. So we could even clone this and then say like at the bottom of the range, price came up, came down, came up, came down. Just fix this up a little bit. So this becomes quite a sensitive level. Now we'll go back to the right. And you see what happened was price tapped into that area. Had a reaction. This is little details that I'll see is like we've got some bullish candles, and then we've got a bearish candle, and it's closed lower than the previous candle's opening price. Even though it hasn't made a lower low, it's still significant that low where it closed lower than the previous candle's opening price. Okay. Now we see that price fell. We see that price fell from that area. Now, what stands out on this, if you go to the hour, this is where you can go down your time frames, and it can really help give yourself this is where you go down the lower time frame and then zoom out and then just sort of see the kind of structure. So we'll just drop down to the hour. Okay, so this is sort of this area. Let's just zoom out and then see what does it look like. You can see now, if we zoom in too much, you get lost in the candles, but you can see that the structure is actually pretty clean. Price came up, came down, came up, came down, came up, came down, came up, came down. And you can see now it's making these like little steps. Okay. This is really, really nice to see. And this happens a lot. It's a matter of just going down to the time frame that you can actually see this to get your idea of where we are. But look where price reacts from. If you see clusters of this, like this is like range, this little bit here. Okay. This is significant. This is like a zone. What you want to be looking at is the high and the low of it. Like look at the candle bodies. Let me just put in, I'll use horizontal ray. So this one's going to be dash lines. Okay. You sort of see that this was like that little range area. That's the top of these bodies. Price has tried to go up. It's done like a little fake out and then dropped. Okay. So the bottom of that range is significant. Let's just put this here. Okay, sorry about that. We had a bit of problems. I had to refresh the charts. Okay, so I've drawn these lines in now, just while I had it paused. Now, what you can see here is when we have price come up, come down, come up, come down, and then when it consolidates and ranges for a bit, That's a really good sign. So, but a lot of people do get caught up trading in that little area. Okay, so but when you have a breakout of that area, okay, so price comes down, comes back up. Look where it taps into. It taps into that area, like this sort of, it acts where this was support now becomes resistance. If it didn't break the high, then market's trending. And this is nice clean movement, and you'll see this all the time. Okay, price pushes down, comes back up. Now consolidates. So it's reacting off something in here, like the lows of these wicks, but it's not as easy to pinpoint as it is to pinpoint when there are ranges. So when I see a range, all you got to do is just wait. You wait, price comes down, breaks out. Now it comes back up and it reacts off this level. So this one will be pretty hard to have taken a trade, because even if you're just sort of trying to trade off these zones, you want to have your stop loss either waiting for a candle confirmation to like a bearish candle at resistance, or you'd have your stop loss above the swing, because that should be where you're protected. Okay, price comes down. This is a daily. There was that daily resistance, the solid line. So we need to be a bit careful when we get down to this level again, because the price comes up, comes down, sort of bounces. If it broke this swing, then we'd think that this daily level could hold and we might start trending back up. But it didn't. It consolidated, then it dropped and it broke through. Okay, price comes up, look where it stops, consolidates for a little bit, comes down, consolidates at the daily level, breaks down, and then comes back up. Okay, so this is nice market structure. So this is trending. So you can use trending strategies in this kind of market structure. It's definitely not for ranging strategies. For something that's ranging is like over here. So price comes down, comes up, comes down, then it makes a higher high. This bit here is higher than this last swing. Then price comes back down again, breaks it, makes a lower low. This is messy. This is messy. So you just draw a line, a box around it. Draw a box around it, and then just wait for a price to break out of it. And then once it starts breaking out, wait for it to create some structure, and then you can start trading it again. So one of the strategies I don't mind is the 20 bounce strategy that they have. Okay, so what it is it taken on the 30-minute when you're looking at like an EMA cross and then a bounce off that. But I'm just going to reiterate, it's not to replace price action and these zones. It's more there just to support that you're looking at the right thing. Okay, so I'm going to drop down to the 30-minute and then look at these levels closer. Okay, so here's the 30-minute. Now we can see if we want to confirm a trend, price action should confirm it, but if you want that extra level of confirmation, that's where the indicators come in. So what I'm going to do is I'm just going to plot on a 20 and a 50. Okay, the 20 is the blue, the 50 is the red one. Now when you get like an EMA cross, like we can see that the trend is down on the last 20 candles because the blue EMA is heading down. And once they cross, a lot of people think, okay, trend is down, but trend is already down. But the EMA is telling you late. So price action is telling you earlier. Price action told you the trend was down once we had that bit. But then price consolidated. Now, you could have got caught out by taking this little breakout, thinking that it was breaking out. But because the trend is down, your buyers should have been, and you're at the daily level, like a horizontal level that we could expect to see a reaction. Taking this as a breakout is risky because the trend was down, and like that's where your bigger confirmation, I mean, that's where you had more room to fall. Look, nice clean candles to the left, that's other price action detail. Okay, but once the EMA is crossed, people can take a trade off the EMA where it just bounces off it. But look where it goes through it. Like, the idea is right, because if you got in here though, your stop loss would have to be above the last swing, because it could, as I showed before, that it's still down, but it could react anywhere from the bottom of this range all the way to the top. Okay, if it breaks the top, then you would want to be reducing your risk in your trade, because it looks like that, that's a bullish rotation then. So the market structure will be broken once it breaks the highs. Until then though, you could be taking like a sell here, okay? If you want to put in a limit order, a bit more of a cowboy trade, that one, like, just a bit wild, just go no confirmations, just a limit order in a downtrend. Or you could wait for like a bearish candle to form, okay? Bearish candle, high wick, like sort of like a high test bar, or a reverse pin bar. That could be your extra confirmation, or you can use these EMAs as well as like your third confirmation. So this one is trending down, structure here, push down, come back up, candle action, like, bearish candle forming at resistance, EMAs have crossed, trend is down, that's a good trade to take. Stop loss can be up here, or if you want to be a bit more risky, it is above the candle, because you're not expecting it to break this candle once you've got all these three confirmations in place. Price pushes down. First level you need to worry about is where the structure where the move had come from, okay? Just in case we make like this double bottom. It continued, good, made a new low. So now your next level of structure becomes this level, okay? Price comes back up. Where does it come to? If we put a line to the left, it's not clear where the structure is. It's not clear. So I do like to look for these ranges. When it's ranged, that's a nice level that price is going to come back up to. Okay, when it's like just a swing like this, it's not as clear. So you could stay clear of that one. Price comes back up, and then once it consolidates, there's a micro swing in here. There's a micro swing. We had like a little range, then price broke down, another little range. Price pushed down. Where did it come back up to? Came up to the bottom of this structure. So you're expecting a reaction. I'll make this one pink. Anywhere from this zone, with your stop loss would have to be up here. So this reaction is a little bit too close, and it's just too big. The risk reward doesn't make any sense. So you might want to steer clear of that one. Coming off this daily level as well. Price comes down, comes back up, and then we have this period where it consolidates. So that's really nice to see. Really nice to see. Then price pushes down. Anytime it bounces off this EMA, like this is daily level, so broken through the daily level, you might have got like a little trade here to push down. See how it just made like a double bottom? Okay, so your last swing is up here. This is still your last major swing level. Until this level is broken, the trend is still down. Okay, still down until this is broken. Price pushes back up. The strategy for the 20 bounce for the one in the smart charts is going to be giving you a signal every time it touches this blue line, but I prefer to use it when it's at like a level of structure as well. Okay, let's just go forward. See how price has never broken the highs, so the structure is still down. Okay, pushes down, comes up, waiting for a reaction this level at this range, then price pushes down, comes up, pushes down again, still trending. See, it's just been trending all the way down. Market structure, it's key. Comes up, plenty of little signals around here, pushes down. Now we're just making double bottoms, so we're still not. So only once we make a lower low, lower close that you can change your last major swing. So your major swing is still where we had the last push down. So here, moving forward, and that's current price at the moment. So this is a nice simple strategy. Using price action, using market trends. If I just pop it on, you'll see all the signals that it does generate. Okay, all these signals that it does generate. But more importantly is the ones that you take that are happening at a level of, like in this, let's make this bigger, okay. In these zones, these ranges, they're the ones you want to focus on. Because if you can take signals that come up to there, you're going to have far better success, and importantly, you can get far better risk reward as well. Because you're not just targeting 20 pips, you're targeting the previous lows and then want to get like continuation. If we take it back to the daily now, you can see how many opportunities there were in the lower time frame, and you might not have been thinking that we were like in a trending market. Okay. Okay, so on the daily, that's just these levels. Okay, it's just these candles. But you can see how on the 30-minute, you've been in a trend for a long time. So I would really encourage, use price action, use candles, use your daily for support resistance. Don't use EMAs on your daily, because it's too slow. You're missing out a lot of opportunities by having EMAs on the daily. If you're taking a trending strategy in lower time frame, you're already trending as soon as you've got like 1 to 2 red candles. But you can use price action to understand where you are a lot quicker. So focus on that. Use it to your advantage, and happy trading. And thank you for watching. Okay. So any questions, drop them in the comments. Like the stream, subscribe, it all helps. So I'll see you next time. Bye-bye.